All right. Okay. Yan Yan says, yes, I have sound. Perfect. So I will be inviting a few of my mentees after this, but before we get to that interview or we get to that conversation, I want to repeat a few things that I want all of you all to remember. So number one is I want you all to remember that we've got only 4 products to focus on, which is life insurance, critical illness, retirement planning, and education planning. These are 4 major products that we focus on, but we've got 4 specializations that we focus on. All right. There are 4 specializations. Number 1, asset management. Number 2, risk management. Number 3 is family office management. Number 4 is corporate financial planning. So we've got these 4 things to focus on. Now, for every single one of you that is in this business, we did 2 activities when we started the session. Number 1, we started to plan what is the kind of premium collection you want to do, right? So what is the premium size you want to focus on? Number 2 is who will be your target audience? Who will be your target audience? Because if you don't know your target audience, you'll be trying to work with anybody and everybody. All right. So I want you all to understand that. The next thing that I want all of you all to remember is that if you choose a specialization, you're basically telling yourself that this is what I want to continue focusing on. Guys, in our business, if you're working with anybody and everybody, you're going to have a problem. And the biggest problem is you will not be happy. The promises that you're making to your clients is the same promise you're giving to your family. All right, till death do us part. You're going to be living with these clients for a very long time. If you don't like them, why are you working with them? I want you all to think about this. If you don't like them, why are you working with them? You need to learn to work with people that you like. You're going to be with them for a very, very, very long time. Please don't regret the type of clients you onboard in this business. It's not about the money. It's about the relationships that you build in this business, the families that you work with. All right. Rahul has asked, what are the 4 products? Rahul, life insurance, critical illness, retirement planning, and education planning. These are the 4 strategies in financial planning, right? Okay. Now, when we talked about asset management, we spoke about concentration versus diversification. And the reason why I wanted to talk about this, because I did want to clarify, there were a few questions that came up during the break. One of the questions that I did want to clarify was concentration makes money. And if we tell our clients to concentrate, then we have to be the people who manage the assets for them. I'll give you an example. There's a family that I work with. All right. So I'm going to give you an actual case study. And then you tell me what would you be doing differently or what would you recommend to this family. So I was sitting with this family. I'll give you a very simple example. I sat down with this quite an elderly gentleman. He must be in his 60s. And he said, Sanjay, I have purchased 5 buildings. I have 4 children. I own 5 buildings, right? I have 4 children. I've put the 5 buildings in a trust. The buildings generate a revenue every year. My kids are allowed to spend the income, but they're not allowed to sell the buildings. I said, great. Okay. They're not allowed to sell the buildings. Okay. What advice would you give them? What advice would you give them? So Gloria says that was an amazing idea. Excellent. All right. It's an amazing idea. I agree with you, Gloria. But what advice would you give him now? So he believes that he has bought 5 buildings. The children are only allowed to consume the rent. They're not allowed to sell the buildings. What advice would you give him? Jonathan, okay. Chris says do estate planning. All right. So what is the meaning of that, Chris? Do estate planning. So Misty, correct. I'm glad. Jonathan, correct. Take 20% of your rental income and convert it into a renovation fund. Mr. Desai says, who will take care of the property? You're correct, Mr. Desai. Who will take care of the property? And he said, Sanjay, I've appointed a real estate property management company that takes care of the properties. So there were 3 things I told him to do. All right. Mr. Client, there are 3 things you need to do to make sure that the children will never sell the building. Number 1, set up a maintenance fund. Number 2, set up a renovation fund. And number 3, set up a rebuilding fund. When you receive rental income from the properties, you need to use some percentage of that for maintenance. Some percentage of that needs to go for renovation so that your rental income keeps increasing. It doesn't disappear. Because if the maintenance of the property is bad, it's not renovated on a regular basis, the value of the property drops. The value of your rentals will drop. So the land value will increase, but the value of your rentals will drop. So set up a renovation fund. And after a certain period of time, 25, 30, 35, 40 years, you need to rebuild the property. Because as you use the property more and more and more, the property depreciates long term. So the land appreciates, but the property itself depreciates. Now, very, very important question. How many of you have thought about a relocation fund? This is something I have not shared on any previous session. So we have the maintenance fund, we have the renovation fund, we have the rebuilding fund. But what is the most important variable when it comes to real estate? Location, location, location. What if the location where our current real estate is not the prime location anymore? So today I've got 5 buildings. What if this location becomes a bad location? What about setting up a relocation fund? I want you to think about this. So guys, this is a case study in asset management. Have I discussed about a product? No. Have I discussed about a company? No. What have I discussed? I've discussed about the problems of assets. Every asset has good and bad. There are six things that you need to remember. Number 1, every asset has pros and cons. Number 2, there are 6 types of income. We've got rental income, we've got dividend income from equities, we've got coupons from a bond, we've got interest income from fixed deposits, and we've got social security. Number 6 is insurance and annuities, endowments and annuities. Most people look at these 5 income sources, they forget the 6th one. They forget us. And that's what I want you all to understand. That are the 6 income sources. Some of these income sources are guaranteed. Some of them are variable. Some of them are guaranteed. Some of them are variable. So when we talk about asset management, the question is, what do we do with these income sources? Are we clear, guys? I want you all to remember this, that asset management is a very fun topic. It's not about trying to sell assets. It's not about trying to sell assets to your clients. It's about managing the assets for your clients, helping them make a decision about what they should do with that asset. So with real estate, I always recommend have a maintenance, renovation, rebuilding fund, and now add on the relocation fund, because I truly believe location is changing every year. Every year, every 2 years, every 3 years, the prime location in a city, a prime location in a country is changing, right? A lot of people don't know that. Janice, you're correct. Rental income, dividends, bonds have got coupons, social security, interest income. You forgot to add interest income, and endowments and variable income. Limari has asked a very interesting question. Where should the client put to set aside the funds for maintenance, renovation, and rebuilding? Very interesting question, Lamar. All right, so let me ask this question to all of you. Where should a client set aside funds for maintenance, renovation, and rebuilding? So, funds that you need for renovation, I would always recommend them, for maintenance, I would recommend you to keep them in a savings account or something that is super liquid. All right. Money that you need for renovation, you will need usually every 3 to 5 years. So property needs to be renovated every 3 to 5 years. If you have an apartment, 3 to 5 years. If you have a villa, 3 to 5 years, you need a renovation fund. So you need money every 3 to 5 years. For that kind of a product, I like to use short-term endowments. Short-term to medium-term endowments is what I like to use. And then comes a rebuilding fund. Now, rebuilding fund usually happens for once in a generation. Every generation needs to rebuild or reconstruct real estate, right? There are two ways to do it. Number one, I like to use whole life insurance because you're building up cash value. And I like to use life insurance because when one generation dies, the next generation inherits a lot of wealth. It's a multiplier. Life insurance is a multiplier of any money that you want to use for rebuilding. All right. So I like to use whole life insurance for that kind of a product. So those are the three strategies that I like to use. All right. Now, before we move on to the other specializations, I do want to invite my mentees into the conversation. All right. So Cynthia, Chris, Dibyandu, Ben, Kaka, you can turn on your cameras. It'll be nice to see all of you guys. There we are.
Hi, Sanjay.
Hey, what's up, Ben?
Great. Have you had your meal yet?
I did. Hey, Kaka, how are you doing?
Hi, Sanjay. Good. How are you doing?
Fantastic.
Hi, Sanjay. I think you stopped our video.
Did I? You can restart it. There you go. Now you can restart it. There you are. You have muted yourself, Chris.
Hi.
Hey,
There you
Sanjay.
go.
Yes.
Hey, so today is the black and white day, is it? So the boys wear the black and the girls wear the white.
Oh,
I wear
really?
the purple. All right, that's good. Wow, that's a major coincidence. Okay, guys, this was definitely not planned. All right, unless they actually planned it. Okay, so it's a black and white scheme for today. I'm the colorful one. I like that. All right, I'm the purple one today. So guys, a few things, right? I want to first of all introduce you guys to everyone. Benedict is based out of Singapore. Chris, Dibyandu, Cynthia are based out of Singapore. Kaka is based out of Malaysia. A little bit more background. Dibyandu is actually from India. He's from Calcutta, and now he's an advisor in Singapore. Chris and Kaka both are from Indonesia, but Chris is an advisor in Singapore, and Kaka is an advisor in Malaysia. I've worked with all 5 of them very closely for many years now, right? I've been with them and we have had some phenomenal conversations. But I think the most exciting one was where we get to and have, case studies. We love sharing case studies. Benedict, Kaka, Dibyandu, Cynthia, Chris, all 5 of them love sharing case studies, right? So they will say, Sanjay, there's this one client, we're looking at doing this, we're looking at doing that. What do you suggest, right? Or what do you think we should be doing? And that's what I love about our community is we agree to share best ideas and best practices. We challenge each other, right? So we challenge each other. Why are you saying this? Why not this? Why not that? We actually question each other. And that's what I love about our community is we love to learn from each other. Ben, what's your specialization, Benedict?
Previously it was asset management. Right now it's family office. So I've been with family office for 2 years.
So you did asset management for 2 years and then you did family office management?
Yeah.
Okay. And Kaka, what's your specialization?
My specialization is the asset management.
Asset management. Okay. Dibyandu, what's your specialization?
Mine is risk management.
Risk management. Okay.
Yeah.
Cynthia, what's yours?
It's specialized in family office management.
Family office. Chris, what's yours?
Risk management, same as
Also
Divya.
risk management. Got it. Okay. So Ben and Cynthia are into family office management. Dibyandu is into risk management. Chris is into risk management, and Kaka is into asset management. Okay. Quick question for all of you. So I'm going to go one by one. It doesn't matter which gender you are. So we're not going to go age-wise. We're not going to go gender-wise, right? Question: why did you choose that specialization? So let's start with Cynthia. Cynthia, why did you choose family office?
I was thinking you won't start with me first, but okay.
I know lah. Go on, tell me, why did you choose family office, Cynthia?
I think the situation started when during COVID. Right, exactly during COVID, I think we started the mentoring session, and I think during that period of time we were in Singapore. We had the lockdown situation. So I think it was a situation where everyone was thinking, how do we conduct business? How do we prospect? And mostly, previously, my business were all purely recommendations and referrals. But because I wasn't out meeting anyone, I was feeling very stressed. So you told me that we should be at home calling people, inviting people to talk to us since we got nothing to talk about, and we just talk on the phone. So that was what I did. So I told my clients, I said, I was really bored. I don't know who to talk to. Do you have anyone who used to go to parties? So maybe a little bit of background. I go to a lot of charity balls. I also have a lot of functions with the ladies in Singapore. Yeah. So there are people who are very used to going out. So I was just calling my friend. I said, hey, you have anyone who is really bored, staying at home, nobody to talk to? Either I can entertain them or they can entertain me. So this was how it started. I didn't think anyone would give me a number. So interestingly, I got connected to families that had old money in Singapore. So if you understand the situation of old money, it's people who currently are wealthy because it was passed down from the previous generation. And there were people that, interestingly, at balls and at charity balls, I really never met them. I never got introduced to them. And that was when I got introduced to quite a few of them over COVID.
All right. So let me first of all summarize something for what Cynthia just said. And I think I want to summarize this for everyone that's watching this session. Guys, Cynthia is a person who goes out, networks at charity balls, and she works in a specific type of market. She likes to specialize with women. So she is an expert in working with women of a certain category, right? So she loves to wine and dine with these women. That's her networking, right? That's her style of networking. We all have different ways of networking, right? So that's not my style, but that's Cynthia's style. There is no correct way to network. There's no wrong way to network. Everyone has a personality. Based on your personality, you would have a different networking opportunity, right? So what Cynthia was trying to do was she was trying to find people to speak to. It wasn't just about getting entertained, but it was also about entertaining, right? So it was about having a conversation that's stimulating for her. And that's what excited Cynthia during COVID. So let's get that very clear. All right, Dibyandu, why did you choose why did you choose risk management as a specialization?
Okay, so before means why I choose risk management, right? So when I started my career, right? So when I started my career, normally I used to love to work with high net worth people, high net worth individuals, okay, high net worth business owners, or even salaried people also. So in the first place, when I present myself as an insurance agent, right? Normally go to just to do the medical insurance or hospitalization plan. Yeah, and followed by, I present myself as an insurance solution. But what I feel that when I present insurance product, the client becomes fear and fear. So actually, I'm not able to position it properly to my client that I create the fear, and after the client also give up.
Yeah, I think there is this problem, Dibyandu, in our business. You see, I think we've all been taught that fear selling is probably one of the easiest ways to be successful in this business, right? So I get that.
Right.
There's the other problem is we are always focusing on a particular product, right? Just like how you started the conversation, I was focusing on medical insurance and using medical insurance as a door opener. So I want this to be very clear to almost everyone that's listening into this session. A product should not be your door opener. Your introduction should be your door opener. Guys, listen to these words very carefully. A product should not be your door opener. because products will keep changing. Your introduction should be your door opener. If your introduction is not good, you're not opening doors in the correct way. All right. When you walk in, people should know why they are coming. Why are you meeting up with them? So your introduction should be your door opener, not your product. Because products, I promise you, will change. 22 years in this business, if there's one thing I've learned, never love your product, because your product will change. Never get attached to your product, because your product will change. All right. What you have to be very much accustomed to, or what you should love, is your specialization. Choose what you love to do. If you love to do risk management, do risk management. If you love to do asset management, do asset management. If you like to do family office management, do family office management. All right. So Dibyandu, thank you very much for that. I'm going to ask Ben this one question. Ben, why did you change your specialization? Why did you go from asset management? So I think Benedict is probably the only one in this group where he started with asset management as a specialization, and then you changed to family office. So what made you change from asset management to family office?
Thank you for your question, Sanjay. So actually, I was going to share, right? So my background before I joined the FA space, I was a banker. So when I was in the BCC program, we were
Okay, wait.
Yeah.
Let me clarify what Benedict means by saying the word FA, because most people don't know what is an FA. So before Benedict became a financial advisor, he used to be a banker. All right, now continue. What were you saying? Sorry.
So when I first joined the BCC, we were then asked to actually choose a specialization.
True.
Given my background in banking, and obviously investment was second nature to me, it was easy for me. And I thought, hey, I should just specialize in this, because I'll admit it, I'm a lazy person. So I wanted to actually, it was about the business of, I had the idea of like building AUM or AUA per se. And then earning as we go along.
Okay, let's say what's AUM. AUM is assets under management. For those of you who don't know what is AUM, AUM is assets under management. So Benedict was trying to build AUM portfolio.
Yeah.
Right. So he was trying to build assets under management. All right. Yeah, go on.
Okay. Then when I started to relearn how to introduce myself, I actually got the chance and privilege to actually meet a lot of business owners. And from there, I actually then transited to foreigners moving to Singapore, whom were really, really rich. And I realized that in asset management, I couldn't actually do I couldn't be of much service. I was only just a small fraction in terms of what I could offer to them, in terms of knowledge, in terms of expertise. I then learned from you, heard from you a lot, and I then decided to move to family office, because I realized that in family office, the key difference is, when I was in asset management, I was very focused on products, like you mentioned, investments, stuff like that. But in the family office space, it was very intriguing, because I was very focused on the right kind of structure for the right fit. So that was my story.
So you wanted to learn structuring. All right. So guys, what I want you to understand from Benedict's story is he loved doing investments. It's not that he doesn't like doing investments anymore. He actually does. But what he wants to learn is, what is the correct structure to hold these investments, right? So family office management, I will be talking a little bit more about that a little later. Family office management is about finding the right structure to hold the assets of the family for multiple generations. So asset management is about managing assets for one generation, maybe two, maybe three. Family office management is about planning 3, 4, 5, 6, 7, 10, 15 generations into the future, right? So it's about moving up that ladder of what we call complexity, and how to make complex things look easy. So tell me something, Kaka, why are you into asset management?
Actually, I was the opposite from Benedict. I started as a family office, right? Remember I told you.
That's why I remember even Kaka has changed. She went from family office, but she shifted from family office to asset management. Benedict shifted from asset management to family office. And this is what I want everyone to realize. The right specialization depends on your personality. The right specialization depends on your your knowledge, the right specialization depends on the type of clients that are available to you right now, or the type of clients you want to move to right now. So tell me something, Kaka, why did you go from family office to asset management?
Yeah, so initially when I choose family office, right, because I think my question to you was I love to actually doing like this planning for the next generations. So family office also one of the solution is that like inheritance, that kind of thing. So I feel that it's really related to me. That's why that I picked a family office. But after that, right, I try to see, because when it comes to family office, especially in my market, Malaysia, right, and also I'm not FA, I'm attached agent. So basically, like if you really want to look for those like very ultra high net worth individual, it might not be easy for me. I think this is something that I have to be very honest to all the advisors. Not like it's very easy to get high net worth individual, might not be so easy to really have a conversation with them. And also second thing is that sometimes when it comes to family office, it takes longer time to close case.
They do take very long to close, you're right.
Exactly, and I need something which is quite fast.
Okay.
At least during my explanation, yeah.
You realize all of us are laughing, all right? And the reason why we're laughing is because Kaka is talking about an advisor problem, right? Our business is like a heartbeat. The small cases and the big cases. The small cases keep us alive. The big cases make us rich. Some of us don't have the ability to wait long term to build a relationship and close very large cases. So we have to get those small cases. So Kaka wanted to go back to becoming a faster closer than being a long-term closer. Let's be honest, right?
Yeah,
Not
I have to be
everyone-
honest.
not
I mean,
is
I
ready
feel
to
that.
say, you know what, I'm okay to wait where I'll close one case in 9 months. Guys, there's one case I've been working on. It's already been 18 months, right? And the case is not yet closed. Okay. So you have to have a lot of patience. But if that one case closes, it's like 10 TOTs in one case. All right. So it's a massive case, but it's already been 18 months. It's not yet closed. Right. And not everyone has the patience to be able to wait for that. And that's why choosing the right specialization is actually very important in our business. So if you have chosen a specialization that is significantly more complex, it is better sometimes to go to a specialization that is a little bit more easy to execute today. So her moving away from family office to asset management makes absolute sense because she realized that she doesn't have the right market for that yet. There's no point in me learning it right now. Let me first become a specialist in my current market, and then I can upscale towards a bigger market. So Kaka, what part of asset management did you really like? So, I mean, how do you do asset management today?
Okay, so actually there's one thing that I would like to share because when it comes to asset management, right, one thing why I like to actually use this topic is that because I think I will call it as a door opener because when it comes to, let's say when you want to sell insurance to your prospect, talk about insurance, critical illness, medical card, that sort, sometimes they get very scared and like they do not want to talk to you about it anymore. But when you talk about asset management, things will be very different because it's more like you're helping me to manage my assets. You're helping me actually to grow my money, and you're helping me to manage my businesses, all these kind of things. So actually recently there's one case that is very special. In fact, that is very, very simple. If I really can share with the audience also, is very good because I feel that it gives me the kind of confidence that you can actually take slightly faster to actually close the case. So actually I met this particular prospect, right? So this prospect basically only believe in properties. So he doesn't believe in, he believes in his business, obviously, but he feels that, typical Chinese family, that when you have property means that you are rich at the end of the day. So I asked this question, I said that, why do you want to buy so much, invest so much in property? So I think his asset allocation is about 50% is on property. 50%. So I feel that 50% actually is kind of big number compared to, like maybe probably you can start from 25. Then he said, no, I want to put 50% on property because I have the intentions is that this how it leads to actually legacy planning. So I said that I want to actually get more property, to ask my parents to buy more property. So at the end of the day, when my parents not around anymore, so the property all belongs to him.
Yeah.
And he actually wants to actually sell the property and he gets all the money. So I asked him one question. I want to actually try to talk about logic with him. Like, if you really want to get money at the end of the day, when your parents actually passes away, right? When your parent pass away in the future. So do you think that is the property is a very good option for you as a legacy planning? Then he said that yes, because tangible, you can touch, you can see, and that kind of ego that he said that, I own this ABCDE building kind of thing, or ABCD properties. But I asked him this question: if you really, really want to just inherit that kind of cash, so insurance is the only investment that can guarantee to increase the value of the assets that you have at the end of the day. So I mentioned about that to him.
A lot of people don't realize the power of insurance multiplication, right? So when you put in $100 into insurance, the probability that the next generation will inherit is always going to be higher than the $100. It'll be maybe $300, $400, $500. So it's guaranteed capital appreciation, right? It's guaranteed capital appreciation. And a lot of people don't appreciate how insurance can be used for asset transfer or asset management for the next generation. What do you think your children would like? And I always ask this question: what do you think your children will like? Your properties or cash?
Cash.
A lot of people don't know the answer to that question. All right. So I love having that conversation. And Kaka, thanks for sharing that case study. Chris, quick question for you.
Yes, Sanjay.
Risk management. Did you change?
No, but that was not my first choice.
What
I
was
wanted
your first
to look
choice?
for something trendy like family office, something that will get me bigger case size. But I realized, like what you said, go with something smaller that you're comfortable in and you like doing. And I think a lot of us maybe have misconception about what is risk management. We tend to think that, it's boring and, very elementary. But having done this specialization for over 1 year now, I have achieved two benefits. The first one is the capacity to go deep in my conversation with my client, which in turn gives me, number two, the conviction to open big. I often hear people say, just add a zero to your presentation. But they didn't realize doing so without conviction is guaranteed to give you zero results. One of my largest premium case was actually from a risk management client. When I first met him, he pulled out multiple illustrations that his banker gave him. And he looked at me and said, Chris, what do you think? Before I learned to be a specialist, my instinct would be to give him equivalent number of counter illustrations from my company and hope that my company product is better than the bank's. But no, I didn't do that. I just gave him one recommendation. And the client himself tripled the premium size. So I find that with the right approach, does not matter which specialization you choose, because it is the how that's going to get you to the results.
I loved what you just said. A lot of people say just add a zero to your illustration and you will be closing bigger. But you're right. If you don't have the right conviction, you will get zero results. I love that. Wow. So tell me something. I think, let me ask this question to the whole audience, and probably the whole audience can tell us this. How many of you have sat down with a client where the client suddenly pulls out a file and says, you see, I've received so many different types of quotations. I've got a quotation from A company, B company, C company, D company, and he's got a whole array of quotations and he shows it to you and he's like, now, what would you recommend? Right? And Chris, and our natural instinct is exactly what Chris said. Our natural instinct is to start making more and more quotations and starting to compare one quote with another quote with another quote with another quote without understanding the purpose of buying. Our clients don't understand why are they even buying it. So when I look at a whole array of quotations that my clients show me, my first question is, why did you even ask for these quotations? What is the purpose? And most of our clients don't know that, right? So Chris, I'm glad you shared that experience, because a lot of advisors, they get scared when they see other companies' illustrations. How many of you have seen other companies' illustrations and suddenly got scared? Be honest, right? All right. We'll wait for the answers to come through. Okay, so while we're waiting for the answers, I do want to ask Cynthia another question. All right, Cynthia,
Yeah.
you are a new advisor in this business, right? So let's say I've just joined this business. I've been in the business for maybe, let's say, 3 to 6 months or less than a year. What is the one advice you would give me if I had to start thinking about which specialization I should look at?
So interestingly, I was just asked this question last week. We had a little workshop in office, and then the question was interesting, but I was a bit upset with the way the question was asked. So this advisor came in and said, so Cynthia, how do we know what is our target market? And when he said the word target, it was like bold, underline, italic, and and then at that instant, I felt that he was trying to portray himself like a hunter. He was trying very difficult to figure out what kind of a prey he wanted. And similarly, when that happened, I told him, actually, a lot of times we do not target a particular person. If you think of yourself as a doctor, you need to ask yourself, what is the problem you'd like to solve? So for example, now, I think when we come into the industry, I think in Singapore, probably similar in other countries, we have different tests, we have different qualifications. We need to know finance, we need to know insurance, we need to know rate of return, we need to know a little bit of economics, things like that, right? General idea of finance to get us along, right? Because we talk about loans, we talk about inflation, things like this. So when I told him that if you continuously think about a target market, essentially you are looking at a person's wallet versus trying to figure out what is the professional problem you want to solve as a professional. So similarly, I told him, if let's say today I am a GP, or rather, if all of us who don't specialize today, we are all GPs, right? You can solve anything. Anyone walks in with a flu, a cough, COVID, broken leg,
Headache,
anything but
whatever.
dentistry.
Yeah.
Anything but dentistry, right? And then
No, you can come with a toothache. You can also come in with a toothache. I'll just give you paracetamol.
If you walk into a GP with a toothache, okay lah. Paracetamol can buy from pharmacy cheaper.
Yeah.
Yeah, so
Go on,
generally, you kind of need to understand what is the problem you like to solve. There are people who maybe like a injury problem, like a fracture or something physical. There are people who like to cut people up and see the heart and how it functions. Or there are people who like the brain because if I can solve the brain problem, I kind of solve the whole body. So I think when it comes to specialization, you need to figure out what is the financial problem that you like solving. Because in specialization,
I'm glad you have said that, because a lot of people don't know how to choose a specialization. So thank you for sharing that story, because guys, I do want you all to realize choosing a specialization is choosing something you like to do every day. So if you can identify the problem you like to solve, it will help you find the right clients. All right. So specialization allows you to choose a target market, and it's not the other way around. Your target market doesn't affect your specialization, but your specialization will affect your target market. Because when you choose a specialization, you're basically saying, this is a problem that I love to solve. And if you have this problem, I can work with you. If you don't have this problem, I'm the wrong advisor. So I'll give you an example. The other day, I had one of my mentees ask me this question, and he said, Sanjay, I'll sell a lot of insurance. I have a lot of clients. And I realized almost all my clients, they love to do unit trust investments or mutual fund investments. Can I start selling mutual funds? And I said, yes, you absolutely can. But tell me something. Don't almost all your clients also like to have bank accounts? He said, yeah. So I said, then why don't you tie up with a bank and, start opening up bank accounts for those clients? By the way, don't you think all your clients also end up buying a house? So why don't we do one thing? Why don't you also start selling real estate, right? By the way, don't all your clients also need furniture for that house? So why don't you do one thing? Why don't you start up an interior design company and, start doing interior designing for them? By the way, your clients all also wear clothes every day. So let's do one thing. Let's also open up a garment store. More importantly, they eat food every day. Oh my God, you should start food services. By the way, they also get a haircut every month. Let's open a barber shop. Where do you draw the line, right? And this is the problem with financial advisors. We have clients from so many different industries that we want to solve all their problems, and we want to become the supermarket for them, the one-stop shop for all your insurance needs, the one-stop shop for all your financial needs. Guys, can you please stop becoming supermarkets? All right? Stop thinking about becoming a supermarket. That is one of the biggest problems. And that's why I'm so glad, Cynthia, you said that. Which financial problem do you want to solve? Choose a specialization so that you know exactly what you're spending your time doing. An organization can be a supermarket. An individual is better for them to become a specialist. So guys, I want you all to understand this. Organizations become supermarkets. Individuals become specialists. You can have a hospital with multiple specialties, but as a doctor, you have to choose your specialization. By the way, some hospitals are even specialist hospitals, that they have super specialization, right? So for example, there is a hospital in Mumbai that I know that only does cardiac surgery, right? But they've got different doctors for the heart. Each part of the heart, there's a different doctor. Each part of the heart, there's a ventricle specialist, there's a valve specialist, there's an aorta specialist, there's, oh my God, they've got different specialization. They've got angiography, they've got cardiology, they've got cardiosurgeons, thoracic surgeons. And when I went to that hospital and I said, wow, I did not even know that there were so many doctors just related to one organ in your body, which is the heart, right? Very interesting thought process. In our business, every advisor is trying to be a supermarket. So guys, if there's one thing you take away from today's session, please stop being a supermarket and start choosing a specialization. All right, Dibyandu, I want to ask you this question. Let's say you've been in the business how long now, Dibyandu?
7 years.
7 years. So
Yes.
in the 7 years, what has changed in your business?
Okay. In these 7 years, right, I think that after I specialized in the subject, right, risk manager, now when I present myself as a risk manager, so I'm not talking about only insurance. I'm finding out the other kind of risk also, other kind of risk strategies also, like what are the kind of loss that the client may face in future. Okay, so these are the, when I'm talking about the risk management to our client, I'm able to create the risk map for our client. So the client is more happy to find out the risk instead of giving them the product solution. So at the end, our insurance is a product that can solve all the problem. But we need to start the concept with the client that how we can create the risk map for our client. So that strategy.
I'm so glad you shared this. So insurance is a solution to a lot of problems. All right, guys, insurance is a solution to a lot of problems. But if you don't know why there is a risk, right, or what is that risk, most clients actually don't know what to do. Yes, Chris, you want to say something?
Exactly.
Yes, Sanjay, I just want to add a bit to what you were saying earlier about drawing the line and also what Dibyandu was sharing, because a case study came to mind. Last year, I lost a fairly large case to the bank, maybe about 1.5 MDRT size. This prospect of mine is an elderly couple, aged 73 and 71, and they have no active income because they're fully retired. The bank recommended them to do a big premium financing case. I could have easily taken the case away from the bank because the equivalent product in my company gives them an earlier monthly payout. But from a risk management point of view, I know leveraging is a risk that they should never take on at that age. But unfortunately, they were lured by the bank's promotion. And the last time I spoke to them, they actually have to surrender some of their traditional whole life policies just to take out their cash value to service the high interest rate. So for me, risk management has given me the conviction, not always to do the big size case, but the conviction to do the right case and learn to draw the line when, you know, what I'm doing could be just introducing more risk to the client.
You know,
Yeah.
I'm so glad you shared this case study, Chris, because I think a lot of people don't understand the concept of leverage, right? Leverage is a double-edged sword. When things are going good, they're going very good. When things are going bad, they're going very bad, right? And you get cut both ways, right? So you could be making a killing when the markets are good, but you could be dying, literally dying, and you'll be giving up very good assets for bad assets because you just can't get out of it, right? And I'm glad, Chris, that you actually had the not just the conviction but the confidence to give up a case just because you believed it was the wrong advice to the client, right?
Right.
A lot of advisors get carried away saying, well, it's going to be the client's problem in the next 2 or 3 years. Why do I care? I might as well just do the case, earn the money, and then let the client figure it out. So Chris, I'm glad you did that, but I want every advisor that's listening into, guys, we've got over 2,000 advisors listening into this session. If there's one thing you take away from this interview, I would say, is I want to take away the confidence that you come with the confidence that you carry into a meeting. Your confidence is what affects your client's decision-making capability. Some clients don't understand the risk. They get attracted by the returns. Actually, I think clients always get attracted by the returns and they go blind to the risk, right? So they're like, no, there's no risk. It's calculated. I love this choice of words, right? It's calculated risk, Sanjay. Guys, risk is risk. It only gets dangerous. When things are bad, it just gets horrible, all right? I have a lot of clients who tell me, Sanjay, I love the stock market. I love investments. When the markets are bad, they're like, hey man, how long do I have to wait? When do you think the market will recover? And I'm sure all of us have had that kind of a conversation, right? So first of all, Chris, thank you for having that confidence to be able to walk away from a deal just because you truly believed it was bad advice to that client.
Yeah.
And I agree with you. I mean, that is advice that I wouldn't be recommending. I wouldn't be recommending significant amount of leverage to people who have got passive income and not active income, because passive income doesn't grow with inflation. Active income probably might, right? Plus you might be able to work harder, you might have to take on a double job, etc. But when you're 71, 73 years old, you just have that much in your pocket, right? And if that's going towards interest payments, it's going to be a very dangerous game. All right, so tell me something.
I have a story also, Dr. Sanjay.
Devendra, tell me.
When I learn about the risk management, right? So when you propose a plan to our client, like critical illness plan or the life plan, life coverage, right? But if we understand, when I get to know about the risk management, the liquidity risk. So if I talk about the risk, means the liquidity risk for the client is more interested to know about what is about this. Like, yes, what kind of risk is this? What is liquidity risk? So I have a conversation
what is liquidity risk? I would love to know as well. Go on.
Okay, so I have had a conversation with my client. It's a true story. I was able to close this case. Okay, so initially when I present this product, means when I was discussing regarding that you have to do this critical illness plan for your family, for legacy or whatever. Then after I learned the risk management, I changed my conversation. I transfer my conversation from there to in other way. Okay, Mr. Client, let's see if as long you are here, you have no problem with the liquidity. Because I agree with my client that yes, you are absolutely right what you are saying, that you don't have any problem with the liquidity as long you are here. You know how to manage your market risk, you know how to manage your business. So the problem, I have two scenarios. You need credit line, you call to the bank will give you the money. I have no problem with this. You are absolutely right. You don't need liquidity. But I have two scenarios that you might need liquidity when you get fall sick and when you pass on. Do you think that your family member also manage the way, means that able to manage the things the way you are managing? So then my client say, okay, so what do you think? I think this is a concern, definitely is a concern. I never thought about this thing.
I'm so glad you shared this, because Devyandu, a lot of people don't realize this. They are very good at managing the risk by themselves. But if they fall sick or they pass away, their family cannot manage the risk. You know, almost all business owners, when they take risk, they forget that the risk gets transferred to the children as well. Your assets get transferred, but your risk also gets transferred to your children. And if they are not able to handle that risk, they actually will lose the assets.
Exactly.
So when I do risk management, I always talk about the risk should die with you, right? The risk should die with you. As long as you are there, the risk is okay because you know how to handle it. The day you pass away, the risk should die with you. The risk should never get passed on to your children, to your family. I'm so glad you shared that example, Divyandu, because like I said, a lot of advisors don't realize what our responsibilities are. Kaka, quick question. Who is your target market? So who do you usually like working with?
Actually, my target market, right, I mean, especially for this specialization asset management, I really love to work with young parents, like my kind of age, like maybe like early, late 30s, early 40s. Yeah. So the reason why is that I feel that why I like to work with them, right? Because nowadays, that kind of age group, right, and also business owner as well, business owner and also young parents, and this kind of age group, normally, they are very well versed in insurance. Okay, so why actually this asset management really give me that kind of opportunity to create something for them is that I always ask them this question, because now, like those days, right, like those like previous, like long time ago, always we have to wait for the parents to actually create a legacy for us, correct? But our generation is very, very special. Our generation have the power to actually create our own legacy, but it's just that how do we want to do it? So for instance, if you really want to create a legacy without even waiting or for your parents to give you at the end of the day, why not you buy a life insurance on your parents? And they actually believe in all this because they are very well versed in insurance and they are very logical. And those day people feel that, like, I cannot do this because when I buy life insurance on my parents, at the end of the day, maybe my parents will start to get sick, or maybe will die faster. But I think this generation is very different. They really understand how this generation.
I had a very interesting conversation. I'm so glad you said this. I actually had a very interesting conversation with a husband and wife once. So the husband is 63 years old, all right, and the wife is 59, and they wanted to leave about $20 million there were 3 kids, and they wanted to leave $21 million. I don't know why 21. I think they were trying to do 777. It's just a lucky number for them, right? So they wanted to leave $21 million for the 3 children, 777. And I took the husband for a medical. I took the wife for a medical. He said, I'll buy 10.5 and my wife will buy 10.5. So after we did the medical test, the premium obviously came out. And then he was like, why is my wife so much cheaper than mine? And I said, well, number one, she's more healthy. Number two, she's younger. And number 3, you have diabetes, she doesn't, right? He's got diabetes and he's got cholesterol, and she is absolutely healthy. So I was like, health-wise, she's great. Age-wise, she's younger, and she doesn't have any pre-existing illnesses like you. And he's like, so can I not buy more insurance on my wife and less on me? And I said, yeah. He's like, so then why do men buy more insurance? Why don't they buy more insurance on the wife? Because at the end of the day, we are leaving it for the children anyways, right? So we actually ended up doing a $15 million insurance policy on the wife, right? And only a $6 million insurance policy on him. Because he realized at the end of the day, I want to leave 21 million for my kids. Now, who knows whether the wife will die first or the husband will die first? There's no guarantee. There's no guarantee that the husband will die before the wife. So he's like, why can't I do that? And when we sat down and we had this discussion, it was about creating 21 million for the 3 kids. And you're right, Kaka. The son said, let's do more insurance on my mom than my dad. And it made sense, right? So a lot of people don't realize this, but there are open conversations happening within families where parents and children are having this conversation that instead of giving money to me, why don't you put that money into an insurance policy? Because it will multiply. Right?
Yeah.
It will multiply. So I'm glad you're having that conversation. So Ben, what is one advice that you would give to a family that's looking at doing, so let's say today I'm a family that wants to get into family office management, right? So a lot of wealthy families want to set up these family offices, etc. What is the one advice that you give to people who are looking to specialize in family office? So what is the opportunity that you see as an advisor in family office management?
So when people talk to me about family offices and stuff like that, I don't jump the gun immediately. I think in the family office space, we really have to understand what is the objective of it. So a lot of people's, because I mean, I'll copy what Kaka said. In this generation, there are a lot of things that's being fed to us. via social media and stuff like that. And we read a lot of different stuff. And what people understand about family office, or I mean, can I use like terms like VCC and stuff like that? It's or a trust and stuff like that. It's very, very different. So my advice to anyone who's actually looking to even start a family office or come into this specialization, you probably have to understand a little bit better. And like what Cynthia said, think about what kind of problems you like to solve, what kind of problems you want to help people with, right? Whereas for me, right, before I moved into family office, I actually looked at who are the kind of people I love to speak to. So it's kind of like it's the same but different at the same time. So like I mentioned just now earlier during my introduction, I really got the privilege and chance to actually get into this space, and then it really intrigued me. And the real reason was because when I was put there, I was like everyone else, a family office, wow, it's a very, very pretty word per se. And I really had no idea. And the client was telling me this, and somebody else was telling me something else, and then I was very confused. So which is why I really,
I'm so glad you said that, Benedict. A lot of people okay, so let me give a little brief to everyone that's trying to understand what is family office management. Family office management is just like setting up a governance system for your entire family. All right, just like how a government manages a country, a family office manages a family. All right, so just like how a government, so think, how does the government manage the country? They look at infrastructure, they look at revenue, they look at investments, they look at spending, they look at beneficiaries. Who do I have to take care of? Who do I have to not take care of? Who will join the country? How will migration happen? That's how governments think. The family thinks exactly like that. Who do I have to take care of? What is the infrastructure I need to build for my kids? What are the investments I need to do? What are the expenses that my children need? Who will join my family in the future? Right? We all think that is family office management. We talk about family constitution, right? What should be the constitution for the family? What are the rules and regulations that the family has to follow? For example, in our family, just a quick background, I come from a family which also has a family office. And one of the guidelines in the family office is every child should be minimum a graduate from university. Now, I'm not one of the smartest kids in my house, all right? My mom, she sat down with me and she said, Sanjay, please, just please, can you graduate from university? So at least you can inherit the family wealth. We have actually put a restriction on children who do not finish education, right? So my mom was like, you're the only son in the house. Please, can you study, get your degree so that you can inherit the family wealth? Do you see how strong the incentive is for the children to start studying, that they will not inherit the wealth if they are not educated, right? So we also provide career counseling. We also have a security council. For example, when you're clicking pictures, guys, I want you all to know this. When you're clicking pictures, don't show your thumb because you're giving away your fingerprints. Don't show your fingers, you're giving away your fingerprints, right? All these are small things. You're putting up pictures of your children on social media. You're creating different social problems, right? These are security concerns for some of the wealthiest families in the world. And that's why social media is a good thing, but it's also a very dangerous thing. You cannot put up pictures online. There are certain pictures you're not allowed to put. There are certain things you don't get tagged into. And I want all of you all to be very careful when you're working with high net worth clients. You don't want to do client appreciation events. Let me tell you something very interesting. One of the biggest mistakes we do when we start working with significantly wealthy families is we start thinking we should be doing appreciation events. It has now become a security concern. You have to remember, we are working in a very private and confidential space. These are clients who like to be confidential, who like to be private. Don't start doing client appreciation dinners, etc., where you invite these people and open them up to general public, right? You're putting yourself and you're putting your clients in danger. So these are small things. I know a lot of people, when we joined this business, right, they said, have client appreciation dinners, do social media marketing, do this, do that. It might not be the right, actually, it's not the right strategy for most advisors. It only works for a few advisors. So guys, don't get carried away by the media. Don't get carried away by things. Learn about best practices, right? Guys, first of all, thank you very much for spending this time and sharing. Guys, these guys get paid nothing to do this, right? They're only here because they all wanted to share their experience with our profession. So please do give them a round of applause. Coming and sharing online and sharing with people they don't know is truly, I'm very grateful that you guys took out time to come and share with everyone that's listening in here. So before I ask all of y'all to sign off, can I ask all of y'all to leave one piece of advice to every single person that's listening in, right? There are almost 2,000 advisors. So one piece of advice. So Chris, I'll start with you now. Chris, one piece of advice to anyone that's listening in.
Okay, I'll quote from Bruce Lee, and some of you may have heard this quote before. He says, "Don't fear the man who has practiced 10,000 kicks once, but fear the man who has practiced one kick 10,000 times." And I think to me that wraps up what specialization is about.
Thank you, Chris. I appreciate that. Don't fear the man who's done 10,000 kicks once. Fear the man that has done one kick 10,000 times. I remember my grandfather telling this to me. He's like, whatever you focus on becomes your strength. Instead of focusing on your weaknesses, focus on your strengths. And it's absolutely true. So thank you for sharing that. Cynthia, one advice.
I think early on you said that diversification reduces risk. If you want to make money, concentrate. I think that applies to specialization as well, but from a different perspective where, like I mentioned, I know the problem I like to solve. I know the cases that I like to have. So concentrating and specializing gives you recommendations because people know the other areas I'm totally not interested in. Therefore, I have people who specialize in asset management and I tell them, I am licensed to do it. I can do it. I don't like to do it. But I only specialize in the structuring of family office and the family office for the families. And therefore, I get referrals and recommendations from people in the financial industry exactly because of my specialization. So similarly,
Cynthia, you're
if I'm a
absolutely
heart
correct.
doctor, yeah, I get recommendation from someone who has a bad liver or a bad kidney or whatever, and they come to me because I do the heart only, right?
So you get recommended to the right clients, right? Specialization allows you to get recommended to the right clients. You don't get recommended to anybody and everybody. You get recommended to the right clients. And that you're absolutely correct, Cynthia. Kaka, one piece of advice before we sign off.
Yeah, I also always want to highlight this, that always be a specialist and not being a generalist. I think it's similarly to like a doctor. When you have a chest pain, you will never look for GP. You will look for cardiologist, right? And the reason why you look for cardiologist because cardiologist has that kind of knowledge and experience, certain skill that they have. So definitely will be able to handle your concerns. So same as an insurance advisor. If let's say I specialize in asset management, means that my prospect actually knows that I have that kind of particular skills that is my strength, my expertise. Am I good at it? That's why they give me a recommendation and also they will work with me. And also one thing is that I actually won a lot of cases by being a specialist because my client will think that I stand out compared to other insurance advisor because this is like my bread and butter. Every day in and out, I'm talking about asset management. So no one else can be actually better than you. Yeah, that's something that I really love to actually.
I think Bruce Lee's quote works very well over here. You're becoming the one kick 10,000 times. Makes sense, huh? All right. So Divyandu and Benedict, I'm going to ask you a separate question, right? So the girls have given an advice to everyone. If you had to look back into your career, right? What is the one thing that you would have changed that would have probably that would have made you achieve what you have achieved today faster? What is the one thing you would have changed that would have helped you achieve your results faster today? So Benedict, I'll start with you.
Okay, so it's actually quite similar to what's the advice I want to give to everyone because I had that in my head. So what I really want to share with everyone here is if after this session, you still don't really have an idea about which specialization it's right for you, I would always say, go and think about who are the people that you really enjoy talking to. Because from there, after you really do some brainwashing, or rather okay, brainwashing sounds wrong. Those are self-reflection, sorry.
Self-reflection
Nervous
sounds
lah.
better, yeah.
Yeah. So after you do some self-reflection, you identify the kind of people that you like to talk to. And like what Sanjay said, it's not about how much money and stuff like that they have. They are not money signs, they're not targets. Then go and polish and invest time to learn how to introduce yourself to this group of people. Because that's exactly what I learned over the last 3 years. And like what Chris said, one cake 1,000 times. The 1,000 times got me here.
God bless. All right,
Yeah.
Dibyandu.
Yes. So position yourself is the most important thing, that the specialization will help us to position to our client and stand out from the rest. So if we want to aim high and aspire higher, then we must have the specialization, because if we talk about particular product, then it's don't make sense to the client also. But if we are specialized for something, then like say I am specialized in risk management, Benedict is family office, Chris is also risk, Kaka is asset management, Cynthia is, so we all have the different segment that we are focusing on, and we can present ourselves in different way from the others. So if you guys want to do something different, if you want to aim high, you must be specialized on something that you are strong at, and you need to find your client base and the target market that you want to work with.
Fantastic. So guys, first of all, thank you very much for the case studies. Thank you for the advice that you've given everyone. More importantly, thank you for the time. You giving this time is truly appreciated. This is time you could have spent with a client, which you rather chose to spend with advisors all over the world. So thank you very much for that. I truly appreciate it. And guys, if you do have questions, do send them across. I will be spending time with all 5 of them later, and I will try and ask them the questions if you do send them across. Thank you. I'll let you guys sign off, and I'll just quickly summarize for everyone before we call it a day, right? So thank you very much. Take care.
Yeah,
Thanks.
Thank
bye.
you, Dr. Sanjay.
Take care.
Yeah,
Bye.
thank you. Yeah,
Thank you.
bye-bye.
Bye.